how to invest. Don't make it any more complicated than it is. Own the stock market and own the bond market. And you can own the stock market through an all-market index fund. You can own the bond market through an all-bond market index fund. And that's the most sensible way to invest. And you have to figure out kind of for yourself. If you're young, you want to be very heavily towards stocks. If you're old and you've got more wealth, less appetite for risk, need income more, you want to tilt heavily to bonds. It's a lifetime asset allocation struggle. And my advice is don't do something, just stand there. Because we get most excited and most depressed and most likely to sell when the market's at a low. And we get most elated and most optimistic when the market's at a high. When the market's at a low, you're tempted therefore to sell. When the market's at a high, you're tempted to buy. So don't try and time the market. I've often said that I don't know how to time the market. I don't know anybody who has ever been able to time the market successfully. And I don't even know anybody who knows anybody that's timed the market successfully. That's a lot of people. And just make sure the funds you buy are low cost. Don't pay sales loads. Watch out for funds that have high turnovers. Index funds do not. Make sure you have very, very low cost operating costs and zero management cost, which you do in an index fund. And then be careful of tax efficiency, because trading is very expensive. You pay taxes, and that devastates long-term investment returns. So it's the bond market and the stock market, and get costs out of the equation. And I guess my final piece of advice would be, don't peak. Just put your money away month after month after month after month, and don't look. And if you start when you're 20 and retire when you're 80, which I'm thinking about doing but haven't decided to do it yet, and you see what that account is worth in 60 years, you aren't going to believe it. Throw everything else out along the way.